and gentlemen, good day and welcome to Associated Alcohols and Breweries Limited Q3 and 9 months FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Riddhi Shah from Go India Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. It's my pleasure to welcome you on behalf of Associated Alcohol and Breweries Limited. Thank you for joining us today for Q3 and 9-month FY26 earnings call. This call is being hosted by Go India Advisors. We have with us Mr. Anshuman Kedia, Whole-Time Director and CEO, Mr. Tushar Bhandari, Whole-Time Director, and Mr. Dilip Kumar Inani, Chief Financial Officer. Please note that today's discussion may include certain forward-looking statements and therefore they must be viewed in conjunction with the risk that the company faces. Without wasting much time, I will hand it over to the management for opening remarks. Thank you and over to you, sir.
Thank you and good afternoon, ladies and gentlemen. Thank you for joining us on Associated Alcohols and Breweries Limited's earnings conference call. The third quarter of FY26 marks another decisive step forward in our journey of building a stronger, more premium-led and scalable alcobev company. Anchored by a resilient and efficient manufacturing backbone, despite delivering a softer revenue for the quarter, we delivered a strong margin-led performance. Our endeavors to improve operational efficiency and easing of key raw material prices have led to an expansion in EBITDA margins to 16% this quarter, compared to 12% in the corresponding period last year. The Indian alcobev industry continues to benefit from structural tailwinds, including premiumization, evolving consumer preferences, and broader consumption trends. The recently concluded EU-India trade agreement represents a constructive development for the sector. Tariff rationalization across select imported categories is expected to enhance competitive intensity and raise quality benchmarks across the industry. While the company expects limited direct impact, developments are being closely monitored. At the same time, AABL remains well placed to benefit from the evolving landscape supported by its strong domestic brand portfolio, extensive distribution reach, and price points that remain structurally insulated from imported competition. We are aligning our portfolio and go-to-market strategy closely with evolving industry trends by deepening our presence in premium segments, expanding selectively into new geographies, and strengthening brand equity across categories. During the year, the company's engagement with Inbrew transitioned from a license arrangement to a contract manufacturing model. As a result, IMFL license revenues associated with Inbrew are no longer reflected in reported revenues, which has had an impact on the top line. The contract manufacturing relationship, however, continues to remain stable and ongoing. Despite this transition, the company remains confident of maintaining FY26 reported revenues broadly in line with FY25. Our core growth engines remain strong. We continue to target 30 to 35% year-on-year volume growth, aided by an improving brand mix and premiumization trends. With that, I would like to now hand over the call to Mr. Tushar Bhandari, our Whole-Time Director, who will take you through our brands, operations, and strategic initiatives.
Thank you. Building on the strategic direction Anshuman has outlined, I will take you through the performance of our proprietary brands and key growth drivers during the quarter, and the progress across our portfolio. Our proprietary portfolio continues to be the primary engine of growth. Our iconic brand Nicobar Gin, launched in 24, has gained a strong momentum in our core market. The brand has resonated well in newly entered states like Maharashtra, Uttar Pradesh, Jharkhand. capturing evolving consumer tastes and fast-growing craft spirit segments in India. Ilford Whiskey continues to strengthen our premium portfolio with its unique flavor profile and curated positioning. The brand is gaining traction in the key market and contributes meaningfully to our high-end whiskey offering. Central Province has maintained a healthy growth trajectory during the quarter, driven by strong performance in Madhya Pradesh while expanding its footprint into the newer markets. Our long-term objective is to build Central Province into a 1 million case brand, supported by phased geographic expansion, consistent quality, and strong brand positioning. Today, the brand spans Central Province, whiskey, rum, and recently launched vodka, enabling us to cater to consumer across the price point and categories. We believe Central Province is well positioned to evolve into the scalable and enduring brand with our portfolio. Let me now give you an update on the pipeline of our products. Our RCD product culture remains on track for the launch in H2 FY26. Within our prestige and above portfolio, tequila and brandy are planned for the launch in Q1 FY27. This is deliberated and strategic decision by company to align with the launch with the upcoming state excise renewal cycle associated with the regulatory timelines. As highlighted in the previous quarter, the company has received requisite license from the Mexican authorities, positioning AABL to be one of the first Indian company to bottle authentic tequila. Together, these launches are expected to further deepen our product portfolio and meaningful strengthening our premium offering across categories. Our malt maturation process is progressing as planned. Capacity will be primarily utilized for internal requirement of our premium and mid-premium whiskey brands, strengthening quality and long-term value creation. During Q3 FY26, we incurred 6 crore towards the cask procurement, and we will continue to procure casks as per the operational requirement. Our centralized fungible manufacturing facility continued to provide a strategic advantage through cost efficiency and operational flexibility. Geographic expansion remains a key priority, where we progressively expand our presence across high-potential states. During the quarter, we entered Jharkhand market with our premium portfolio, including Nicobar Gin, Titanium Triple Distilled Vodka, Ilford, and Central Province Whiskey. Jharkhand represents a promising market for us, and we believe our curated premium offerings are well placed to resonate with the evolving consumer preference in the state. I will now hand over the call to our CFO for a detailed review on the financial and operational performance for Q3 FY26.
Thank you, Tushar, and good afternoon, everybody. I will focus on the operational and the financial performance for the quarter end 9 months FY26. For Q3 FY26, net revenue from operations stood at INR 260 crores, reflecting a sequential growth of 3%. Now coming on to the profitability, gross margins for the quarter improved to 46% versus 36% of the last quarter. This was driven by softening of raw material prices and uptake in realization from byproducts. We expect grain prices to remain broadly stable in the near term, supporting margins. Further, EBITDA for the quarter was INR 42 crores, representing an increase of 73% quarter on quarter, with an EBITDA margin of 16%, improving by 700 basis points from Q2 FY26. Profit after tax stood at INR 27 crores, an increase of 95% compared to the previous quarter, resulting in PAT margin of 10%, reflecting an improvement of 5% margin from previous quarter. Additionally, it is worth noting that the company has recognized a provision of rupees 2 crore related to retirement benefits in compliance of new labor codes. For 9 months FY26, net revenue stood at INR 781 crores with EBITDA of INR 103 crores and a PAT of INR 65 crores, supported by IMFL proprietary volume expansion and improving margins. Now, in terms of segmental performance, for 9 months FY26, IMFL proprietary volume stood at 1.7 million cases, representing a growth of 32% on year-on-year basis. IMFL licensed volume stood at 1.02 million cases with a decline of 27% on year-on-year basis. As mentioned previously, this was attributed largely due to change in the business scope. In terms of volume of merchant ENA volume stood at 14.7 million liters and ethanol volumes were 25 million liters for 9 months FY26. On the revenue front, proprietary IMFL revenue was INR 127 crores, growing at a 30% year-on-year basis, while licensed IMFL revenue stood at INR 122 crores, down by 30% year-on-year basis. Merchant ENA revenue was INR 100 crores and ethanol revenue for the quarter was INR 178 crores. Looking ahead, as we roll out new products and expand into new markets and geographies, we remain steadfast in scaling our proprietary brands, supported by prudent capital allocation and planned capex, and our focus continues to be on improving profitability, strengthening the balance sheets, and enhancing returns. With that, we can now open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vinay Rawal from Choice Institutional Equity. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes.
Yes. So just a question that I had. So we have seen that the company, is saying oversupply in ethanol. So what is the outlook in the demand-supply gap that is currently there in ethanol market? So how would the management see this going ahead?
See, right now, what the supply of ethanol is equivalent to 25% of blending of ethanol, and government has approved only 20% of the blending of ethanol. Okay, if in future the blending percentage goes up, then the ethanol requirement will go up. Actually, the supply, as we already said, supply is higher than the demand. And as we've already said in our earlier calls as well, that our primary focus and growth driver would be only and solely expansion of our own proprietary brands, and that's what we are primarily concentrating on.
Right. Sure. Another question that
plus to cover the ethanol also, we are also looking at supplying it to the private parties.
Okay. Right. One other question that I had was on the margin front. So on the EBITDA margins, most of the portion of growth seems to be coming from the decrease in COGS, basically, cost of goods sold. So, how do you see that the margin improvement would go ahead going forward?
See, EBITDA margin, we'll try to, the contribution from the EBITDA margin has primarily, as you rightly said, has come from the softening of the raw material prices. And second is the increase of our own proprietary brands. So our proprietary brands have grown by around 30%. And going forward, we will see a continuous growth in those brands. So the margin would be we would be looking at stabilizing. If the commodity prices goes up, which is unlikely because we are expecting a good monsoon this year, the crop is good, which we see unlikely. So the margins would be maintained as we are in the growing phase right now. And once the launch of entire portfolio, so next year there will be complete launch of the entire portfolio when the company would be ready for the future with the entire premium and semi-premium and popular brand portfolio. Post the entire run of the year, we might see a growth in the margin.
Okay, sure. That answers my questions. Thank you, sir.
Thank you. The next question is from the line of Shreya Chatterjee from Ageless Capital. Please go ahead.
Hello, sir. Thank you for taking my question. So on the IMFL side, how is the numbers going on in Maharashtra, UP? If you can give the number of volume cases that has that has been done by till 9 months FY26.
See, this is the first year when we've launched in Maharashtra. So primarily the volume in cases, if I say, is very, very low as compared to. Still, AABL is primarily the volumes are dominated in the states of Madhya Pradesh and Kerala. So out of the entire volume, 80-85% volume comes from Madhya Pradesh and Kerala, and rest comes from the other states. Maharashtra, we are growing slowly because we have to take a cautious approach because entering Maharashtra, each and every district requires a huge amount of capital in terms of entry. So we are entering one particular district and concentrating and growing. So right now, only we are available in, say, Bombay, Thane, Pune, and Nagpur. So these are the primary regions which we have entered. And the premium portfolio offerings, like, for example, Hillfort and Nicobar, we've just entered in Bombay and Nagpur. So it's just, so any market you enter first 1 year, 1 to 1.5 year goes in analyzing and creating a space and creating the brand awareness to the brand associated per se and individual brands. So we are concentrating on that, and similar is the case with UP.
So if I can understand, it would be less than 1% in both these markets, the market share. And so if you could,
both the markets would be around 2%.
Okay, the market share as of now.
Not market share, out of my entire...
out of the entire... Yeah, got it.
Yeah.
And so if you could give the volume-wise breakdown of the cases for probably Central Whiskey, Hillfort and Nicobar for all the states combined, that would be really helpful.
So out of the entire portfolio, out of the entire sales which we've done is around 17 lakh cases. So out of the 17 lakh cases, again, on the premium side, 80 to 85% is almost on the popular front category, and the balance 10 to 15% in the premium front category. Right now, we are, as we said on the call also, that we are concentrating on growing Central Province brand as per se, which includes Central Province whiskey, vodka, and rum. And we are trying to make it a 1 million case brand, so that's what we are pushing on. Because, see, it's very, in premium brand category, it's very competitive. So the movement would come on a slower basis.
Got it, sir. And any numbers you can give to the number of retail touch points that you're thinking of adding into the new markets that you're entering?
So any new market we enter, so every market has got a different strategy altogether. But we have to work on all-round approach. That is, we have to hit the customer from all the sides. So for which the pillars, as you rightly said, one of the pillars is width of distribution. So width of distribution, just for an example, if I'm entering in Thane, so I will be concentrating and entering into almost 80% shops of Thane. So that's how we play around in terms of width of distribution and visibility. And for example, in UP also we are going state-wise because UP is a very vast state per se. So district-wise, we are entering UP as well.
So any possibility of giving the number of volume cases that you are currently doing in this UP and Maharashtra?
So UP and Maharashtra, out of my entire 17 lakh cases, I would be hardly doing around 20 to 25,000 cases.
Okay. Got it, sir. Thank you.
Thank you. The next question is from the line of Aman Baheti from Incred Capital. Please go ahead.
Hi, thank you for the opportunity. Am I audible?
Yes, sir.
Yes, sir.
Yeah, hi, sir. My first question was in the line of our margins. So we saw, a big uptake in margins due to raw material prices, but we already have exceeded our guidance as per se for IMFL proprietary margins. We have done 21%. So don't you think when the operating leverage kicks in, we would be able to do 25% plus margins?
Aman, see, as I said, that is, we are in the growing phase, and our objective in Shreya's answer also, I answered that today also our 85% portfolio is the popular brand category. So as we are growing on the premium branding front, and we have got immediately 2 other premium products lined up, which is premium brandy, premium tequila, and RTD. So there will be certain spends which would be required for the brand awareness in these product portfolio. We'll have to do events, we'll have to do bar takeovers. So there'll be at least a certain amount of spend which will go there, unless until these brands are stabilized in next 1 to 1.5 years.
Okay, sir. And in Maharashtra, like you said, the volumes are quite low right now. So, what are the realizations are we doing there compared to MP and Kerala in the premium product?
So in Maharashtra, on average, we would be doing a realization of around, say, 1,500 rupees a case. Whereas overall realization, if you see, ours is around 700 to 800 rupees a case, overall portfolio. Because Maharashtra, post the MML policy, we could not launch our Central Province series per se. So we've just launched our premium brand, and in next one month we'll be launching our RTD and other premium brands. So that will further increase our realization in Maharashtra.
Okay. And on MML, like we discussed earlier, is there any plan for acquisition in states like Maharashtra or Kerala, etc.?
So Aman, we are in a very growing phase, and we are on a lookout of opportunities if it's there and available in the market. So recently we came across an opportunity of acquiring a unit through NCLT route in Kerala market, which we have already applied for, and that is going on. So if we get that unit, so that'll be an acquisition. And apart from that, we are also looking out in couple of 1 or 2 states. In UP, we have already acquired land. We are in process of acquiring licenses and other thing. So we want to have at least 2 to 3 more distilleries across India, if we want to go pan India, because that will give you better economics in that particular state. Because in India, every state is a different country altogether. Every state has got its import duty, export duty, and still the higher volume brands are on the popular category only. So a company like us who wants to grow rapidly and have a mix of popular portfolio which will give its top line, and a premium portfolio which will strengthen its bottom line, we will have to have local presence also in few of the states which are the mass consuming states. So we are definitely in lookout for opportunities.
Sure. And sir, last question was on our ENA volumes. So they are in a declining phase. So it's all because of our internal consumption, or what's the reason for that?
Aman, as you rightly pointed out, it's primarily because our internal consumption has grown is because of increase in our own volumes, and as it's expected to grow further, we might also in future look at increasing our ENA manufacturing capacity. We already have sufficient amount of license capacity in place and most of the necessary approvals in place. So we might also look at expanding our ENA capacity. looking into our requirements and market requirement.
Okay, thank you. That was very helpful.
Thank you.
Thank you. The next question is from the line of Aanchal Pal from MNCL Mutual Fund. Please go ahead.
Yeah, hi. Good evening, sir. So, my couple of questions from my side. My first question is, just wanted to understand how are we planning to scale up our proprietary brand going forward?
Achal, what we are doing is that we are working on a strategy in each and every state in a different manner. So one is to increase your proprietary brand because now consumer is also quite very much aware and he is also looking for a quality product. So what we are doing is that we are giving value for money to the customers, whichever brand we design or liquid we do. If the price point is off the price point look and feel above at what we are offering, that's what we are looking into. Second is we are being consistent in our quality. We are looking for right partners, right distributors. And fourth and fifth most important thing is that the company is also looking at taking the right talent from the industry because our alcohol industry is a very personalized or very relationship-based industry because in most of the states, the retail shop owners are owners who own the retail shop since a couple of years. So person who's experienced, our All India sales head is who spent almost 30 to 40 years in Pernod and USL. So we are looking at acquiring good talents. And then we are, fourth thing what we are looking at is bottoms up approach for a popular brand. And fifth, what we are doing is for premiumization, brand awareness where a customer can at least taste my liquid. So these are a couple of strategies which we are adapting on the popular front and the premium front separately.
Okay, understood, sir. And also, sir, how are our proprietary and partner brands performed in the newly entered regions? And also, are there any difference in customer acceptance and margins versus mature regions?
In certain states which we enter, we get immediate response. Like, for example, we just entered this quarter Jharkhand. We got an immediate very good response. Like in the first month, we sold almost 50-70 cases of our Nicobar Premium Gin, which is considered to be very good. And so we became in the first month itself, we are number 3 there. But obviously, this is the first month itself. We have to wait and watch. So in certain states, you get initial good response. In certain states, it takes time for you to get a right kind of response. And as India is a diverse market with different cultures, different backgrounds, so same way the preferences in different states is totally different. So just for example, if I take about Madhya Pradesh, brandy market is hardly 1%, whereas I'm just comparing the two biggest states which we hold, and both the states are equally opposite consumer pattern. So Madhya Pradesh holds only 1% brandy market, whereas Kerala holds almost 70% brandy market and only 1% whiskey market. So you have to have a local strategy in place in whichever market you enter.
Okay, understood. And what about, sir, margin on the margin front, mature market versus the new regions we have entered?
So margin does not vary much per se because you are as we are in the growing phase, as I told you. So initial investments more will go in developing and stabilizing a particular brand. So that's why it does not vary much. But there are certain states wherein you have to work on a very thin margin. In certain states where the initial cost of entry is substantial, like for Maharashtra Retail Association is there. So you have to give a substantial amount of discount first to enter and be available in the retail store. So every state has got different strategy altogether. In Kerala, it's completely owned by the government. So government has got fixed formula on which it will be lifting. So initial phases, if you don't have volume, you will be paying higher amount to the government. So every state, we have to work differently.
Okay, so understood. Thank you.
Thank you.
Thank you. The next question is from the line of Tushikesh Shah from Alchemy Capital. Please go ahead.
Yeah. Hi, am I audible?
Yes.
Yes, sir.
Yeah. Sir, my first question was on IMFL licensed. So you talked about Inbrew giving us a contract manufacturing instead of us having different kind of contracts. So my first question is, what is the underlying growth of that business? So excluding Inbrew, how much have we grown in volume terms and revenue terms?
So see, excluding Inbrew, if I talk about, we have got other brand which is from Diageo, which is the brand McDowell number one celebration rum, and DSP. So these are the two brands which we are doing it. So the volume is grown by around 3 to 4% in this particular product. And now our concentration is to grow only our product portfolio. So that's what we are working on aggressively. And this is a licensed brand is only for the state of Madhya Pradesh.
Right. So, sir, if we can talk about this 3 to 4% growth is year on year.
Most probably it will be in the same range because this is the leader brand in that particular category.
Right.
Yeah.
And then what is this quarterly? If we look, we have 72% growth in volume. So what would be the reason for that?
72% growth in the volumes.
Yeah, so it was 2,41,000 going to 4,13,000 cases, right?
No, I think you're talking about IMFL?
IMFL licensed.
Once again. So IMFL licensed in last Q3 we had 6 lakh cases, which has gone down to 4 lakh cases.
4 lakh. But if you look at
so there's a decline in 33%.
Right, that I understood. If we look at Q2 FY26, the number of cases were 2,41,000.
Okay.
Last quarter. So that has gone to 4,13,000. So what is the increase? Where are we getting this delta from?
No. So primary quarter is different. Q2 is more skewed towards the whiskey, and Q3 is more primarily skewed towards the rum. So the rum sale in the entire year, 50% of the rum sale, 50 to 60% comes in the Q3.
Okay, understood. So my second question was on malt plant. What is the capex we are doing for the malt plant?
So on an overall front, we will be doing a capex of around about 100 crores, out of which around 65 crores we've already invested. And the balance which would be done would be in purchase of maturation of casks. So this is our maturation has already started. It's been almost 2 months. Our maturation has already started. So probably within a year and a half, our first single malt super premium product would be available in the market.
In 1.5 years. Okay. And how big do you think is this opportunity for us?
So this is a very big opportunity because as you all are aware that Indian single malts is getting world over recognition and are doing really good and are being compared to any of the good scotches in the world. So there is a big opportunity. As there was a similar case which has happened in terms of Japanese whiskey, and they proved their mettle in terms of quality. Same is right now the phase with the Indian single malts. So there's a huge opportunity. Plus, it will also give us more economics because right now whatever malt we are using, we are purchasing it from outside. Okay. And outside we are purchasing at a very high cost, and plus consistency is not sure of because I'm buying it from the third party. In future, in my own brands also, I will require malt as my brand grows. So that will give me a better margins as well and give me a consistency in quality, which is very important.
Right. And so my third question is regarding one of the earlier participant asked whether we'll be increasing our ENA capacity, right? So you told that we may be increasing our capacity, but I think earlier you had mentioned that our ethanol plant is fungible and can be used for ENA as well.
Yes, if required, it can be done.
Right. So instead of increasing the capacity, don't you think it would be better to move into a better margin, better economics business and reduce our ethanol?
Then it will be better, but apart from that, ethanol is a totally separate right now. So we are also looking at, as I said, that we are also looking at acquisitions in other states as well, because we need to be present in a couple of states. So it might be here or it might be somewhere else as well.
Okay, understood. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Dhruv Shah from Ambika FinCap. Please go ahead.
Hi team, thank you for the opportunity. I have 3 questions. Anshuman, did I hear it right that you said that we will end the year with flattish growth on the whole year basis? In your opening remarks? Hello, can you hear me?
Yeah. Hi Dhruv. Can you just repeat your question?
No, in your opening statement, did I hear it correctly that you said that we will end the year with flattish revenue for the whole year?
Yes, compared to the last year.
Right, so that means Q4, are we saying that we will grow the revenue by more than 25%? If I just do a rough math.
Yeah, because we are generally Q4 is the best quarter for us, so we are expecting that to achieve that. Yeah.
Okay, understood. Tusharji, my next question is on previous participant question that can we see some margin improvement coming from the malt itself towards the end of the next year, because we will be 1 year into maturization and then we can use some of the malt for our own whiskey products?
Definitely will come towards the end of the next year. So right now we are using in our primarily one of the whiskey central province, we are using 1.5 year malts. So depending on the quality, if it's equivalent, so we'll start using it in Q4 next year in our own products. And plus the single malt which we launch would come in Q4 next year or Q1 after that.
Okay. Understood. And my last question is on ethanol. Why aren't we seeing any benefit of the lower raw material prices on the ethanol side of the business? Because ethanol, we are still making only 2% EBIT. So why aren't we seeing any raw material benefits passing on to the ethanol side?
Ethanol EBITDA would be somewhere around right now. Should be around 6%, not 2%.
I was talking about EBIT, so I was just subtracting the depreciation also in that.
Okay, EBIT you're talking about. Okay. So the thing is that ethanol, obviously, because the fixed cost is already there. That is the primary reason we've not seen the major, and the ethanol volume has gone down.
Okay, understood.
Yeah.
And Tusharji, just coming back on my first question about this 25% growth on Q4, that will be primarily driven by our RTD launch and IMFL proprietary, right? Because we still have in-brew base in the Q4 last year, right?
Yes, RTD launch, proprietary, and apart from that, we might look at these 2 major products, yes.
Okay, perfect. Thank you so much, and all the best.
Thank you. Yeah.
Thank you. The next question is from the line of Harsh from NV Alpha. Please go ahead.
Hello.
Yeah.
Yes, sir. Please come.
Yeah. Am I audible?
Yes, sir.
Yes, sir.
So, just a small question. Start of the call, you said that our focus is on growing the central province, which is a popular segment, because there is a lot of competition in the prestige. So, sir, our strategy, vision, and conviction on when you say a malt, whenever it is ready, which is premium, how are we going to grow or outgrow the market if we are not able to, or maybe focusing less on the prestige and above as of now?
So we are not focusing less on prestige and above. So it has to be a combination, as I said, that for a company which is at a growing stage, would definitely need a combination of both a popular brand and a prestige and above premium brand. So there has to be a mix of both, because a company needs both top line and the margin contribution as well. low-hanging fruit which is there right now and which is doing really fairly well is Central Province entire series. Central Province Vodka Orange we launched 3 months back and has already gained a 15 to 20% market share in Madhya Pradesh. So there has to be a volume-driven brand. There has to be 1 or 2 brands which will be a million-case brand. So that's what we expect coming out from Central Province. And the premium segment, which will include our tequila, our Nicobar gin, and our premium single malt, strategy would be totally different on the premiumization front, and the the spends also would be higher in that particular category.
Got it. So, sir, one follow-up. After 1 year, when these products are up and running, you mentioned our marketing costs will go up. We'll able to maintain the same margins. You did mention about this, but I missed this point.
Yeah, we'll be able to maintain the same margins. We'll be able to try and maintain the same margin because premium products would not attract that much in the bottom line direct impact. Because in premium products, initial 1.5 year, you will need an equal amount of spend to have that kind of visibility and awareness of the brand.
Sure. Got it, sir. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Manoj Kumar from Adinath Financial Services. Please go ahead.
Good afternoon, Tushar. My first question was regarding raw material prices. What has been the average raw material prices last quarter? And what is the current prevailing price?
I think, Idani-ji, I'd like to highlight on the same.
Last quarter, our prices was around 23,000. And this quarter, it is around 20,000 plus.
Yes. It means this quarter we will be saving a lot on raw material prices.
Yes.
For this Q4, the prices will be stable.
And regarding this trade deal with the US, they are insisting on corn imports. Do you think it will have the effect on the corn prices in India going forward? And it will be act as a stabilizer of corn prices?
The thing is... Yeah, please. The thing is that genetically modified corn is being restricted by the Indian government per se as of now, because that will have a great impact. One of the main purpose of driving the ethanol policy or blend of ethanol was to generate income in the farmer's hand. Okay, if genetically modified corn comes into India, so that will impact a lot. For a company, it'll be nice because probably the corn prices will go down substantially. But we'll have to wait and watch because I don't think so there's any clear picture on that front.
Regarding this EU deal, what effect it will have on our company?
Primarily talking about the EU deal, if we talk about, EU deal would not have substantial effect on a company like us, which is still primarily in the popular category, but obviously it will have an impact in the premium category per se. But most of the states will compensate it probably in one way or the other. And plus, apart from that, as Anshuman said in its opening remark, that it will also increase a healthy competition and will help in increasing the benchmark standards. So everybody will have to give that kind of quality. And plus, apart from that, we are well prepared for this entire EU deal with the help of coming into a premium portfolio category and setting up our own malt plant. So we are well prepared for the times to come ahead.
Sir, my next question was regarding, can you sense any opportunity of exporting ENA to EU?
So we have already done that, and we are also in process of doing it. We've been known in the country for last 4 decades for the quality of ENA which we manufacture. Diageo, during the COVID and post-COVID times, have purchased ENA from us to make Smirnoff vodka and the other products in the European markets. That speaks about the quality and the standards of us, what we have. But right now, our focus is primarily on utilizing the ENA capacity in our own value-added product. Yes, if opportunity is there and if I get good value, I'll export it, which I've already been doing it earlier.
Regarding SDF industry, when do you think it can be closed, the matter will be closed?
So the matter is still with the NCLT. So as soon as the NCLT gives the nod, we have submitted our bid. We've not got an approval. So as soon as we get the approval, we will get it. It depends on NCLT. Pardon me, sir?
Any hearing date has been fixed for that?
No, sir, not right now. I think probably in another 1 month, 2 months, 3 months.
Okay.
You know how the NCLT court works.
Yes, sir. Thank you,
yeah,
sir. Thank you so much.
Pleasure. Thank you.
Thank you. The next question is from the line of Aniket from CR Kothari Sons and Stock Broking. Please go ahead.
I hope I'm audible, sir.
Yes, sir.
Yes, Mr. Aniket.
So my question is regarding to the quarter 3 FY26 revenue. As compared to the previous year quarter, it has dropped. And I think quarter 3 is quite strong for the company and quarter 4 as well. So can I know the reason behind the drop?
Mr. Nani would like to throw a light on this.
Can you repeat again the question, please?
So my question is regarding to the Q3 revenue, which is dropped as compared to the previous year quarter. And my understanding is Q3 and Q4 both are very good quarters for the company. So I would like to know the reason behind the drop.
Basically, just hold on. My Q3 last quarter and Q3 current quarter, the revenues dropped mainly due to the franchisee business converted to the job manufacturing business. So around the total revenue down is 56 crores from year-on-year basis. And out of that, 52 crores is due to the franchisee business of InBrew shifted to contract manufacturing business.
Okay. And same question regarding to the margins. The margins went up, but the revenue went down. But I would like to know what product drove the margins up specifically. If you can mention like two.
Specifically, yes. Basically, IMFL proprietary brand is the highest contributory segment, which is giving a 21% EBITDA margin. And second is our IML business. And then third one is the franchisee business. These are the key drivers. First is IMFL proprietary business.
Okay. And
plus apart from that, the softening of commodity prices. So these have all contributed to the EBITDA.
And we expect the same to go into the next quarter as well? Softening commodity prices?
I think it will remain stable.
Okay, understood. Thank you for touching on to that. My final question would be regarding working capital. I remember you mentioned the potential increase in the working capital for UP and Maharashtra market. Can you quantify the expected impact going forward at FY26, FY27 on working capital?
So actually, we don't have any. Yeah, right now or in the near terms, we don't have any foresee in working capital the requirement much. Based on the growth, we will deploy the working capital since we have a surplus fund invested in the some securities, which will be converted into the working capital whenever required.
Okay. So can we expect to the working capital days to further tighten down, or it will remain same to the current level?
It will remain same or slightly go up because as it will completely depend on the sale in the primary regions and the bigger regions, which is Maharashtra and UP. UP, the payment cycle is slightly higher, and plus working capital also requires, apart from our cost of product, would also require the excise duty. And plus, similar thing is the working capital might go slightly higher if the sale goes higher.
Okay, understood, sir. Thank you for clarifying the.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
I would like to thank everyone for taking time out and joining this conference call. If you have any further questions, you may feel free to get in touch with our IR agency, which is Go India. Thank you for sparing your time.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.